Jon Johnsen, Chief Executive Officer of PKA. PKA is one of Denmark's leading pension fund managers, $66 billion in assets under management. Jon, thanks so much for joining us here. I know you guys have a focus on climate change and investing in businesses that will be impacted by climate change. What did you make of President Trump's speech yesterday in front of the United Nations General Assembly, where he basically called climate change a hoax? What does that mean to people like you who are deeply involved in investing in some of these issues?
So from my point of view, my world is a lot more simple because I have a fiduciary responsibility for my members. And my members believe that the climate change is on.
Okay.
And we have to deal with that. That makes my world easy. I have to find a way to balance, returns and, of course, also dealing with the climate change.
The EU climate commissioner basically called the Trump administration's actions or lack of action on climate as checking out. What are you seeing in the private sector? That may be the case when it comes to the U.S. government's involvement and their backing of projects like this, but what do you see in the private sector?
In the private sector, I see it's so much on still. We invest a lot here also in the U.S. The projects are different now from big projects to more community-scale projects. So, I mean, it's good business to put up a solar farm somewhere, attach battery storage to it. It's still a good business. So we see that in Texas, California, and so on. So I think we have to distinguish between what's happening on a federal level and what's happening in the different states.
Where are the best opportunities that you're seeing these days in renewable energy or the energy transition broadly defined?
I think it's the more mature element, so it will be solar, onshore wind, and so on, is the things that's still on. And then, of course, being a Dane and a part of the Europe, we will see a lot of big projects in Europe, I think, also offshore wind farms and so on. And we will definitely be an investor and player in that.
I mean, there's such a clear contrast between how the Scandinavians, how the Europeans regard climate and climate finance, climate investing versus what the U.S. is doing right now. From where you sit, does that create more opportunities for you?
I think I must agree that the world is more complex now. Geopolitics are very different. Multilateral, unity and sticking together is so different. So you have to adopt in a way that you have to find your way through what to do in the U.S., in Europe, and in other places of the world.
So it's more work.
It's more work. It's more work. So we partner up with partners that would help us, do investments in the U.S. or in Europe, and they are very different partners and they do very different stuff.
ESG, environmental, social governance.
What's that, Paul?
Yes, it is. It was a very big investment topic over the last 10, 15 years. In fact, Bloomberg Intelligence has hired many analysts to cover the ESG aspect of global investing. It has really fallen out of favor here in the States. Talk to us about the rest of the world and how the rest of the world, from an investment perspective, looks at ESG.
I think that if I look to Europe, it's definitely still on. So it's a big part of what we do. So we evaluate on, environmental, social, governance, everything, all the investments we do. And we try to find our way through also to engage with those companies that need to transition a little bit. And eventually we can actually also divest them if we don't think they do it correctly. So ESG is very much on in Europe, and I think that will continue. But we have more than half of our investments are in the U.S. due to the market size, right? So we are.
So what are you finding from the company's perspective? We know how the president in this administration feels. How do the companies feel? How do the boardrooms feel? What are you seeing?
I think we must admit that right now ESG has gone down a little bit. But if you look to European companies or European presence, they are still on because it's something that is important to the European Commission and it's important to the local governments in Europe. But definitely it's changing a little bit.
The criticism against ESG is that there's no standard for it, that people can kind of make up their own rules and make up their own benchmarks. And now that the U.S. has pulled away from it completely, do you find that Europe, the rest of the world, is moving forward with creating standards, with creating unified standards for ESG so that everyone's on the same page?
Actually not. I don't think that the rest of the world are defining, one global standard. I think we have to deal with that. You have standards in Europe. You have now CSRD and other standards are, pull back a little bit. And then we have other standards in other parts of the world. And that's just, adding complexity and more work for me. But
so just as messy as it's always been.
Just as messy as it's always been.
So what is this? I mean, Bloomberg is a data company. And on the Bloomberg terminal, we have lots of ESG data. It's a component of the FA tab, which is the financial analysis tab. So in addition to getting income statement data, balance sheet data, cash flow statement data, there's a tab for ESG data. Bloomberg's certainly working to, I guess, improve the quality and consistency of the data. What else has to happen, do you think?
I think that's very important that we have like Bloomberg, that you continue doing that, because we use those data when we do our investments and when we evaluate what we invest in. We are largely, on listed equities, we are a passive investor, but still we want to exclude, companies that are really not in line with what you could call sensible ESG standards.
What do you see overall when you look at the investment landscape as we, wind down 2025? The tariffs were a big deal in April. Things have calmed down, and people just seem to have gotten used to the uncertainty and the moving goalposts. But beyond that, do you see that there's more of a willingness to put money to work because everyone has just kind of come to grips with the fact that there's just going to be uncertainty?
I think uncertainty is risk, and risk is cost. And so it really does mean something. And if you look to PKA and how we balance our investments, we believe that Europe is changing, and the German debt break is off, and now a lot of spending is going to come, and also the building defense in Europe. So we have actually turned the wheel just a little bit from the US to the Europe, because we think that Europe is potentially the new growth.
Can you put some numbers on that?
It's just a few percentage, but some.
How about technology in Europe? We haven't, obviously that has not been an area for investment opportunities. There's a handful of companies, SAP, semiconductors and so on. But what has to change for technology to really grow and flourish in Europe, do you think?
I was in Silicon Valley in February, and it's fantastic. I mean, from an investor perspective, and the capital market there is just fantastic. It's so hard to beat for Europe.
Yep.
What we need is some sort of one capital market in Europe, and that's a big job for 27 nations to agree on that. I think that's something that has to change if we should build it. If you look to many of the tech companies in the US, many of the ideas were founded by Europeans. I mean, so we just need to keep those companies...
That talent at home.
At home, somehow.
We need a regulatory regime that supports technology.
Exactly. I agree. Can you help me?
Yeah, I don't know. It's
that's a big ask. I mean, how do you do that, at a grassroots level? You mentioned about keeping talent at home, but what can governments and institutions do to really encourage that, especially now that you've got the U.S. government imposing $100,000 fees on H-1B visas? There's an opportunity here.
There's definitely an opportunity, and we are the largest private equity and venture investor in Denmark. And what we see is that we are trying to focus more on European venture and European private equity. So we need the managers that can pick the right companies, and then we can supply the capital. And I'm sure this is a long process. This is going to be maybe 5-10 years before it works. And then eventually, and we do have some European tech companies like Mistral, AI company in France and so on. So let's see. I hope that Europe can keep up.
John, thank you so much. Really appreciate it. Spending some time with us. Jon Johnsen, he's the Chief Executive Officer of PKA, one of the largest pension funds in Denmark.